Here's a question. If you're a Muslim living in the UK, are you allowed to invest in the stock market? Most people say yes, some say no, and a surprising number just quietly avoid the whole thing because they're not sure. But here's the thing, the answer is actually yes, with conditions, and those conditions are way more manageable than you've probably been told. By the end of this video, you'll know exactly how to build a halal investment portfolio in the UK from scratch, including one platform almost nobody talks about that makes this genuinely easy. Let's start at the beginning. Islamic finance is built around a few core principles. The big one is the prohibition of riba, which means interest. You can't earn money simply by lending money and charging interest on it. That's why conventional savings accounts paying you 5% interest are considered haram by most scholars. The money has to be tied to something real, a business, an asset, actual work. The second principle is avoiding certain industries. Alcohol, tobacco, conventional banking, gambling, adult entertainment, pork, these are off limits. You can't knowingly profit from them. Now here's where stocks get interesting. When you buy a share in a company, you own a tiny piece of that business. If the business is halal, say a technology company, a healthcare firm, a retail brand, then owning a slice of its profits is generally considered permissible. You're not lending money and charging interest. You're a part owner sharing in real economic activity, but it's not black and white. Most large companies have some level of debt on their balance sheets, and some earn a small percentage of revenue from impermissible sources. This is where scholars introduced the concept of purification. If you hold a fund and say 2% of its income came from interest-bearing activity, you calculate that percentage of your return and donate it to charity. You're not keeping tainted money, you're cleansing it. Think of it like buying a mixed bag of sweets. You pick out the ones you can't eat and give them away. You don't throw the whole bag in the bin. Here's what actually happens to most British Muslims when they think about investing. They Google it, they find 3 contradictory fatwa, they close the laptop, and they leave their money sitting in a current account doing absolutely nothing, maybe for years. Imagine you're 28. You put £300 a month into a sharia-compliant global fund, returning a modest 7% a year. By 58, that's over £340,000. Now imagine you waited until 38 to start. Same amount, same return. You'd end up with around £170,000. That 1 decade of hesitation cost you £170,000. Not because of bad investing, because of uncertainty. The goal today is to remove that uncertainty completely so you can actually start. Right, so which accounts and platforms can you actually use? First, accounts. Good news, a stocks and shares ISA is completely compatible with halal investing. The ISA itself is just a tax wrapper. You contribute up to £20,000 per tax year, April to April, and everything inside grows completely free of income tax and capital gains tax. The ISA doesn't care what you invest in, you choose the funds. Same goes for a SIPP, a self-invested personal pension. You get tax relief on contributions at your marginal rate, so a basic rate taxpayer putting in £800 gets topped up to £1,000 by HMRC. That's a 25% instant return before you've invested a penny. Again, the SIPP is just the wrapper. You pick Sharia-compliant funds inside it. Now platforms. Wahed Invest is probably the most well-known Sharia-specific platform in the UK. It's FCA regulated, FSCS protected up to £85,000, and it offers a ready-made halal portfolio. Very low friction, great for beginners who just want to get started. Trading 212 and free trade both allow you to build your own halal portfolio using individual halal-screened ETFs, exchange-traded funds. The HSBC Islamic Global Equity Index Fund is one of the most commonly used. It tracks global companies that pass Sharia screening and is available on multiple UK platforms. If you want a more automated pension solution, Nest, the workplace pension scheme, actually offers a Sharia-compliant fund option. So if you're employed and auto-enrolled, ask your employer or check your Nest dashboard. You can switch your fund allocation without leaving the scheme. Here's exactly what to do. 5 steps in order. Step 1, open a stocks and shares ISA. If you haven't got one, Trading 212 and Free Trade both offer free ISAs. Takes about 10 minutes on your phone. You've got a £20,000 annual allowance. Use it before you invest in anything outside an ISA, because that tax-free growth compounds massively over time. Step 2, choose your fund. If you want simple and hands-off, look at the HSBC Islamic Global Equity Index Fund. It's cheap, an ongoing charge of around 0.3%. It's diversified across hundreds of global companies, and it's Sharia screened. If you want someone to manage everything for you, Wahed Invest's aggressive growth portfolio has delivered reasonable returns and is completely managed within Islamic finance principles. Step 3, set up a direct debit. Decide on a monthly amount you won't miss. Even £50 a month gets you started. Automate it so it leaves your account on payday. Investing what's left over never works. People always find something to spend it on. Step 4. Handle purification. Most halal funds publish a purification ratio each year. It tells you what percentage of your return came from impermissible sources. Multiply that by your return, donate that amount. It's usually tiny, we're talking pennies on every pound. Step 5, check your pension. Log into your workplace pension, whether that's Nest, Aviva or another provider, and check if they offer a sharia compliant fund. Many do. Switching takes 5 minutes online, and it's the highest leverage move most people overlook entirely. That's it. ISA, fund, direct debit, purification, pension, 5 steps. So, 3 things to remember. 1. Halal investing is possible and it's practical. The ISA and SIPP wrappers work perfectly alongside Sharia-compliant funds. 2. Platforms like Wahed Invest, Trading 212, and Free Trade give you real FCA-regulated options available right now. 3. The biggest cost isn't picking the